Hello everyone, Andy here with tradingadventures.com, going through your weekly charts once again as the markets continue to just rip higher. Just an incredible move off of this March 31st low. Now up 19% from the low to the high, not the open to close, but stellar move. You can see this thin line, the 4-week moving average, pushing up very steeply, supporting prices a bit this week on the slight dip that we had, and all of the moving averages are below and stacked in sequence and rising the right way. So we watched this Fibonacci extension level for quite a long, just when it had to back off and reload a little bit. It's ripped right through it and just continues higher. Weekly RSI just now getting over the 70 mark, and this has just been a stellar ride that is slowing down. Perhaps we talked about that a few weeks ago. After 3 incredibly large weekly candles higher, the pace has slowed slightly, but the upward momentum is still fully intact here. Qs, similar action, of course, and a slightly red candle last week for a little bit of a breath, but up once again this week, and the similar graze or touch there of the rising 4-week moving average, and all is still well. This was a similar situation as SPYs. We watched this extension level for many weeks, months even, and now it's actually much closer to the next extension level than it is this breakout level back here. So we can continue to watch that in the weeks and months ahead. But again, after such a stellar rise, you have to be considering at least the possibility of some pullback or slowdown. Who knows when it will happen? It will happen at some point, but we do not know the timing or the extent. So in the meantime, Dow went through its time correction. It didn't really pull back hardly any at all, stayed above the rising 4-week the whole time, and negotiated this previous consolidation area very well, and a forceful breakout this week over the extension level, similar to the ones we watched in the SPYs and the Qs, and up into new high territory as RSI clocks in at 63.88. Volume is starting to pick up again after there's a lot of conversation and debate about the health of the rally with volume being so light. We simply observed and noted that price can still go up on low volume. It's not a make or break event. It's just one piece of the puzzle when we're putting these charts together and trying to figure out what's going on. Volume now coming back to about the rolling 20-week average and taking the Dow 30 stocks up into new territory. And even the small caps are making a new weekly closing high here. A little bit of a dip down to, and you may have noticed on the other charts, we've got an anchored VWAP now from this low of March 31st. We'll take a couple others off here as they don't really add anything to the chart at this point. But almost touched that in this little shaded area, which I had highlighted as some previous highs or previous price history, but rebounded very strongly now. And similar, have a Fibonacci extension up here just ahead. Haven't quite broken it yet, but that's a level to monitor just as a road sign, as a reference point. Doesn't mean it has to be resistance, doesn't mean it affects price action in any way, but it is something we can pay attention to. Bitcoin did not fare so well this week. I pointed out earlier in the week that this VWAP off the high candle back here was still, well, I started saying, that is potential resistance. That turned into actual resistance, and now we're all the way back down to the rising 10-week moving average and testing. This was a low from back in April of 25, and that's where price sits right now as Bitcoin tries to figure out what it wants to do from here. The dollar still doing nothing, which is just fine. It's consolidating, it's bouncing around here in this now long-standing range. It's still below this shaded area, which if I zoom out here, you can see there's a lot of price history all the way back to early 2023 in this level. So it continues to just move along sideways, mostly under this level, under this VWAP from the top, and very near the moving averages. So no excitement out of the dollar, which is just fine. The rest of the world, the ACWX, which is the all-cap world index ex-US, if you see right here in the watermark, it's participating as well. Still going through a time correction here. It's not selling off. It had a breakout candle. It gave a lot of that back, which was an incredibly encouraging sign as it happened. You never want to see breakout moves give back almost the entirely move, but it's actually held up very well and back up here over some of those previous highs and still riding the 4-week moving average higher. So that's a healthy trend, nothing to be concerned about at this time on the rest of the world, with the exception of China. It still lags a bit. It's below all the moving averages. It can't get above this anchor from the April 25 lows, and just kind of building out this consolidation in the overall downtrend here. We've been monitoring this RSI action for quite a while. No new ground there. This little attempt back here as it made new highs was short-lived and actually ended up marking the top as we come back and consolidate and drift lower there on FXI. Bonds had a bit of an eventful 2 weeks here. Sharp sell-off last week, which continued into this week and got a bit of a rebound. So we could draw a bit of a reference area in here, just as again, just a visual cue. It doesn't mean it's resistance. It doesn't mean it's anything. It's just kind of like putting a post-it note on the chart. Something to pay attention to was this previous low on very, very high volume just a few weeks ago. And now we're back into that level. Do the sellers show up again? Will it be proved to be resistance? It didn't matter at all last week as we sliced right through it, so it did not add any support. So just a level of interest there to monitor. The Treasury bonds, of course, similar action, just drifting lower below all the moving averages, a little bit of a bounce, and now we can watch this area and see, is it maybe a little bit of support back here a couple of weeks ago? Does it provide any resistance going into next week? Who knows? We have to watch and see. A chart that I shared on X earlier this week was the 30-year yields. And we can see this is a very long pattern building out over the course of many years, an ascending triangle. It looked like maybe it wanted to break out, getting a little higher here this week than the previous 2 attempts, and then turned around and came back down. So that corresponds with the bounce that we saw on the Treasury bonds. Bond prices go up, yields go down, and we have to wait and see now. Do the moving averages matter? Does this pattern continue to build out? It's getting very close to an apex out here, and presumably there would be a directional resolution at some point, but there doesn't have to be. It can continue along flat and within a range for who knows. But if it does break out and rates start to move higher, that will be an alarm bell for many. You can argue all day about the implications and the economic impact and so on and so forth. We'll just watch the price action and see what happens. High yield bonds just still moving around here close to the averages. The 4 weeks coming down, the 10-week is flat, and the 40-week is up here declining a bit. So high yield bonds are not trading like stocks. We watch those. It's a higher risk asset class, and generally you want to see that behaving like the stocks do, and it's not doing that recently. I don't know if that's an early warning bell. I'm not going to try to pretend to understand or explain the yields, the potential economic impacts, or whether credit spreads are sort of sounding the alarm bells or any of that kind of stuff. We're just watching the price action here. And while it's in an overall correction or downtrend consolidation, whatever you want to call this mess in here, on the shorter time frame of the last few weeks, it's a little too deep, but it could also be a bit of a bull flag pattern. I wouldn't be surprised to see this resolve to the upside and go back and test this level. So either could happen here. It could go lower down here. This is just, it's in kind of a no man's land here. And we have to keep in mind that the weight of the evidence points more towards a downside resolution, as it is below all but the 10-week moving average, which is flat. So it's leaning more bearish here, but we won't predict. We'll just wait and see what happens. Commodities, we're going to skip right over the group and just look right at crude oil. And I like to share, this is another chart I shared earlier in the week. Let me get over here to the crude, and it looks a little cleaner on this chart. Crude oil, previous supply, supply, and supply once again. So you can see how that level, for whatever reason, has been resistance for crude. And sure enough, it came back down again, and that was a potential we were watching for. Just as context, the candle charts don't show it quite as cleanly, and again, it's not a magic line, it's just a reference point. But that's what's going on in crude. Gold continues to decline and move lower out of this consolidation pattern, and very nearly testing the rising 40-week. So not a broken trend. This is still a strong uptrend as indicated by the rising 40-week. The Bollinger Bands are flat and tightening. RSI is right about the 50% level. If gold was going to mount another move higher, if this was an Elliott wave, folks might look at this and maybe this is a wave 5 impulse with a 1, 2, 3 corrective wave, that kind of thing. We won't worry about that. But if the point is, if gold were to mount another move higher, this would be a logical place for it to start. We've got several factors lining up in here. We've got these previous highs as potential support, and we've got the rising 40-week moving average, and then we've got a test of this level here earlier several weeks ago as well. So some support and a bounce here could occur, not a prediction, but something to watch for. And of course the opposite, if it doesn't hold this area and continues below the rising 40-week, then that's much more cautionary for gold there. Silver holding up maybe a little better. It's a little higher above the 40-week, still in this consolidation range. Had a really big move last week that didn't stick around. So just more of a time correction here as the Bollinger Bands are flat. The RSI is flat in the middle of the range, and no directional resolution for silver. Now looking quickly through some of our other charts and indicators. Here's the equal weight S&P 500 on its own. We've got a breakout here a couple weeks ago in the CMT Association Market Mosaic Daily newsletter, which I'll mention again here in a few minutes. I noted this bit of rejection here at the previous high, or this resistance level. We can go ahead and knock that off the list because we've got a breakout this week. Even the small caps, even the equal weight index is breaking out to new highs, and that was a level that the point of that article, which I'll link to, was that would be another confirmation of the overall strength of the market. When the equal weight indices, the smaller market cap companies are also breaking out, that just tells you that despite some of the other breadth measures and things, this is a market that is, at least by this measure, firing on all cylinders. Equal weight Qs, incredibly strong and have been throughout this whole move. And then we'll just skip these and go straight into some of the relative strength relationships. And as we do that, and speaking of the Market Mosaic Daily, this is one of the articles I put out here. This was on May the 8th, a couple of weeks ago. And this is a bit of a refresher of this article that was on my website about this time last year. Relative strength comes in a lot of different flavors. We talk about RSI, we talk about relative strength versus other comparisons, and we talk about relative strength versus the overall market. So if you'd like to read this updated article, I do suggest it covers it pretty in depth, but without being too long. So take a look at that. I'll add the link in the show notes. And back to the charts, we see growth versus value, a little bit of a move in favor of value, but still in a consolidation here as the 40-week comes down, the 10-week comes up, and the price action is holding here pretty steady. Is that bad? No. Does it mean anything is wrong or broken? Of course not. If we look at these on their own, we can see that both indices are rising very well. All this comparison tells us is that one isn't significantly outpacing the other. However, from this low here up, the strength has been with the growth side of the market, but it doesn't mean that anything is broken. And if we were to see shifts towards value or towards this is consumer discretionary versus consumer staples, again, not a broken chart. That's just an arm wrestling match that we know isn't really favoring one group or the other. Discretionaries, very strong bounce off of this level and now building out a bit of a bull flag pattern. So discretionary stocks are getting involved, which is good. That's what people spend money on when times are okay and they've got disposable income and they're having fun and doing all that kind of stuff. And we've got a bit of a trend line here. So this could be a breakout area to watch going into the next week or two. which would, if that happens, adds to the bullish case for the overall market. And here's the staples. If people aren't spending discretionary money and they're focusing on the day-to-day items that they have to live, then that means the positioning is a little more defensive. And we saw that happen here, which coincidentally, this marked the low of the market. As the market bounced, discretionaries came down. Now they've got a little support. They're kind of in the middle here, not running away. Look at these long tails, or shadows, I should say, in either direction. A little bit of an uptrend, but no drastic moves. And that shows up here as it's just kind of chugging along flat. It's not moving a lot in one direction or another. So there's a little bit about relative strength. We can also judge the strength of the high beta version of the market versus the low volatility areas of the market. And this tells us clearly that people are comfortable taking risk, which makes perfect sense right now as the market has been ripping higher, and a little bit of a dip that got bought back up very quickly. So the risk on signal from this particular relationship is still firmly in the on switch and in the on position. And then here's the equal weight, cap weighted versus equal weight. Again, nothing wrong, nothing broken. Just shows us that there was a little bit of a shift here in this uptrend as people buy more toward the cap weighted SPY as opposed to the equal weighted RSP. Now a couple of measures of breadth and participation. This is the percentage of S&P 500 stocks trading above a 50 and 200-day moving average. This is holding up just fine. We see it. We noted the dip here a little bit a few weeks ago. That has bounced nicely this week as we see more stocks back above a 50-day moving average and a 200-day moving average. It's not running away. It's not breaking down, which is just fine. You could argue there's a little bit of an overall downtrend or a reduction in participation if we judge these recent highs, but it's not a warning sign. This matters most when we see very high or very low levels. That's what we're looking for on this, and we certainly don't have that right now. As long as this continues along mostly flat or slightly rising in the middle of the range, then things are just fine from a participation standpoint. One area that did show a potential crack beneath the surface was the bullish percent index. And before we get into that quickly, if you're wondering what the hell a bullish percent index is, that is also explained in the chart school section of tradingadventures.com. And you go through here and simply it counts the number of stocks on a point and figure buy signal. So you can read through this article and get familiar with the bullish percent index if you like. But ultimately, it's just another measure of how many stocks are participating in the overall moves. And similar to the percentage above the moving averages, what we're really looking for as potential signals or alarm bells are very overcooked levels. Generally above 70% or below 30% have more meaning. You can see this move came from 66% down to 32%. So choppiness around the middle of this range isn't such a big deal. It's in what's considered a bull correction, which means it's in a column of O's after this high could not exceed this high. But if we see this holding up in the 50 to 70 range, then generally speaking, all is well in the market and it's got broad and healthy participation. The NASDAQ bullish percent has rejoined a column of X's, coming up very strongly here from down near 44 and all the way up to 58%. So that's doing just fine as well. What we want to look for, if you get up here like this reading back in early 25 where it touched 84%, that tells you that stocks have already gone up and there's potentially not much more room to go, because if everything is already up, then there's what's left to buy, right? So that again, these are the areas 70% and above, 30% and below that we really want to focus on. Choppiness back and forth in the 40 to 70% range or even 30 to 70% range are not that big of a deal, but it is nice to see them rising again, telling us that more stocks in the NASDAQ 100 are on a point and figure buy signal. Finally, the NYSE index status, which I don't pay too much attention to these classifications, but it just tells us that we've had higher lows and lower highs and lower lows on the overall chart here. But again, you can see that the last two columns have stayed within the other columns. So just more choppiness there in the NYSE index as far as a bullish percent goes. So back to our weekly charts here, as we'll round that out with a couple of sectors and some Mag 7 names. Semiconductors, no surprise and no secret, they've been a leading portion or the leading portion of this market move higher, and slight exhale rest last week that quickly resumed this week in spite of NVIDIA earnings that didn't really shake things up much. The rest of the index is continuing very strongly there. We can add another anchor off of this bit of a dip, which started the move, and we've got a very strongly rising 4-week. We've got this anchor, we've got the rising 10-week. Everything is moving the right direction down here underneath, and we have a lot of reference points to monitor. Should we see a bit of a pullback, RSI continues to be very high, up at 83.6 right now, and volume has been increasing steadily. So lots of bullish factors combining there on that chart. Biotech stocks looked pretty weak earlier in this week, and came back very well like the rest of the market. Not breaking out, not breaking down, still above most of the moving averages. The 4-week is coming down here a little bit, and we have this reference point, which is, if we zoom out, this was a high from way back in November of 2021. And you could say maybe that added some resistance. I don't know that it's all that important. It's just a reference point, just a note on the chart. But a time correction here as it holds this range and could be looking for another move higher. We'll see how that develops. If it doesn't hold this rising 4-week moving average next week, then maybe it comes back down into this level for some deeper consolidation. But it's certainly not broken yet. Software has remained surprisingly resilient. AI is not totally killing the software sector. It's still choppy and messy, putting in some very broad ranges here, but it held this support after a brief undercut, and now it's back above all but the declining 40-week moving average here. So that's a good sign for software. We'll see how long it can continue. Mag 7 names as a group back into new highs, although they didn't beat last week's candle, so a little bit of a breath here. Still on the rising 4-week moving average. And financials, which have been slow to get involved in this market, are still trying to hold on. We've got this Fibonacci retracement level here, which is maybe adding some support. We've got the 4-week rising up, and on the shorter time frame, this is potentially a bit of a bull flag pattern here. So if financials can get up and finally get over this flat or slightly declining 40-week moving average, then we've got the potential to get back up into testing or even making new highs over in this neighborhood. The RSI continues along flat. It's holding up well, which is good. And this is a level, call it 5250. 5258 is the actual reading on the 40-week. And getting above and staying above that should open up more potential for a move higher in the financials, which would, of course, be another signal of strength and confirmation for the overall market. Energy sector trading very much like oil. It looks very similar to a crude chart. No surprise there. Bit of a breakout attempt that got sold off late in the week there on energy names, as that continues to be very heavily influenced by news out of the Middle East and the Strait of Hormuz and all that kind of stuff. Apple has been a Mag 7 leader, just incredibly strong. Did not even pay any, well, it stopped here a little bit on this week, but once it broke out, it never looked back, and on into new highs after new highs after new highs there on the weekly chart of Apple. Amazon, another very strong move, and a bit of a break here for the last few weeks, which is well deserved. Nothing broken, nothing wrong with Amazon. Came back down and tested the anchor off of this breakout candle here. We could move this down here if you want to and see what it looks like. It puts it a little below this Fibonacci extension, but again, precision is not the goal here. It's just an area that we want to note and be mindful of. Google, Also a very strong move and a bit of consolidation here, closing just below the rising 4-week, so another well-deserved test. Meta is the one Mag 7 name that just can't seem to get going. It's below all the moving averages. Rejection off of this trend area, which has happened before as supply comes in and pushes the price lower. And now we've got, over the last 3 weeks, we've got a bearish consolidation pattern very near the bottom, or at the bottom of this large red candle, and it's below all the moving averages. So not a lot to be excited about there for Meta. And on the other hand, Microsoft has, much like the software sector as a whole, gathered some strength and is consolidating here pretty well. It's a little bit of a wide range. We've got the anchor off of this low here and this high here, and that's keeping a lid and a floor on things in both directions. The 4-week is flat, the 10-week is rising, the 40-week is declining. So we'll watch Microsoft and see, can it finally get above. This is another chart I highlighted earlier this week on X as we monitor this anchored VWAP from the high back in October of last year. It has been resistance. It continues to be resistance. Getting above and staying above that will be a meaningful occurrence for Microsoft should it happen. I mentioned NVIDIA earlier, had earnings this week, and not a surprise. NVIDIA doesn't move much, it seems, on earnings these days, and went to new highs and came back and closed here just above the 4-week moving average. So not as strong as the semiconductor index as a whole, but certainly doing its part and rising very well here since the March 30 bottom. Finally, Tesla. No resolution here. It came down, it tested this retracement level. It's back above the moving averages and looking stronger, but it's not running away to new highs like many other things. So Tesla's still lagging a bit there, but looking constructive on this shorter time frame here, but overall still in this range. This is roughly 350 to 490, and it has been building out for quite a large number of weeks. And we'll see, can it continue to climb up here, move the Bollinger Bands into an upward motion, and then finally take out this level? Who knows? It could just as easily, although it is above the moving averages, that's a check mark in the bullish side of things, but it's entirely possible that it comes down and tests this level and the lower Bollinger Bands as well. So there's your weekly charts. There's your overall look at the market. We don't see many alarm bells at all. The 2 alarm bells I was watching over the last 2 weeks, or potential alarm bells I should say, was the lack of a breakout on the equal weight S&P, and then this week we took a look at the 30-year rates, and both of those reversed or broke out where they needed to. And so this is a very strong market that continues to climb, and once again we will get a pullback. We don't know exactly when or to what extent, but the early indications always show up on the smaller time frames. So here's my roadmap chart. This is the 1-hour time frame of the stock index futures markets, and what we saw over the last 5 days is a reversion to, or a reversal to, a series of higher highs and higher lows above a now rising 5-day moving average. That's your early indication there. You can do that on a 1-hour time frame. If you like the index ETFs, here they are on a 30-minute time frame. Higher highs and higher lows above a now rising 5-day moving average. And we can see SPY didn't quite take out this high. Qs didn't quite take out this high. IWM not quite in a bigger time frame reversal or breakout, but the Dow is stronger. So those are that's how you use those multiple time frames to kind of zoom in and get clues on the price action quicker than watching the weekly charts. That's why we look at them all together. So take a look at that. Thanks for watching the weekly charts. Follow on X to see more daily updates in the smaller time frames, and we'll continue to monitor the situation and see how the markets develop. Have a great long weekend. Don't forget why we have the long weekend. It is Memorial Day, as we pay homage and honor to all of those that sacrificed and gave their time and ultimately their lives to ensure that we have the quality of life and the opportunities that we have. We're blessed to be able to monitor the markets and trade day in and day out, and have some appreciation for those that make that possible. Thank you all, and we'll see you again soon.